The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 20th, otherwise known as the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Would love to hear from you. You can call us at 877-927-6648. Now, if you can't call in, but you still have a question, then go ahead and send me an email. Send that to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a bit of a mixed bag. Sorry about the throat here, folks. It's going to be kind of breaking in and out, but that's what it is. So right now, we've got a mixed bag out there. The mix coming from the semis, which are down just slightly, 4 points. The trannies off 91 points. That's 0.7% to the downside. Otherwise, all the U.S. indices are trading to the upside. Dow's up 121, about 0.4, 0.25% for the S&P, or about 10 points. Basically flat for the NASDAQ, gets up 5 points. Russell's up 13, 0.8%. The big movers out here, well, you've got the U.S. dollar index, which is down at least 84 pennies, trading out at 103.49. I say at least because we've got a 10-minute delay on that. You've got light sweet crude is flat. Natural gas is down 39 cents, but gold and silver, they're moving to the upside. Gold's up 28 bucks, and silver is up $1.04. To the downside, you've got take that back. You have the 30-year Treasury down 1.20 ticks. He's trading out at 128.05. So what does all this mean? Great question out here. Let's do this. Well, actually, I've got the chart for Apple up on my screen. Let me go over to our multi-panel set of charts up here. Let's get Apple up here. Take a look at it. What Apple is doing right now, it's testing a prior swing point. So it's testing at least the top of that prior swing point. That swing point is from the trading day of June the 16th. So let me just draw the line, the price line that is, at the top and bottom of that swing point. And that's going to be between 129.04 and 132.39. So that's the range to be watching. The reason I were watching is yesterday price closed just below that 132.39 level. The actual close yesterday was 132.37. So by 2 pennies, it closed below that swing point with lighter volume. Yesterday's volume was a total of 79 million shares. The swing point has volume of 107 million shares. But we didn't get the rejection. So we want to watch, because if you do get a close today above 132.39 on less than 107 million in share volume out there, then you would have a test and rejection of a swing point. And what I love Tom's expression, if you can't bust them down, price will try to bust them to the upside. So that's the first chart that we take a look at here. Now let's just size this down and see what's going on the weekly time frame and on the monthly time frame. On the weekly and the monthly, we can see that price right now is trading below its profile level, so that's kind of a bearish signal. The weekly volume, it's only the beginning of Tuesday, for goodness sakes, but that weekly volume had 541 million shares. You're 110 right now. So watch for that. The reason to be watching for that, a test and rejection of that swing point, whether that occurs or not, If it does occur, the reason to be paying attention to that, and I'm going to switch panels here. We'll get to the 3-paneled white background charts, daily, weekly, and monthly there. And what you'll see is that what Apple's also done on a daily basis, it has triggered a Rhodes momentum indicator signal. So the last time that we got one of these that were confirmed was a trading day of October 13th. That clearly set up a bottom, and we saw a nice little bit of a rally. I was listening in just before I turned on to Basil's show, and he said, of course, once you get to peak D, that's the letter that's up on that screen there, the markets oftentimes will do something different. Well, certainly in the case of Apple, that's what it had done. Now, we also see that there's a potential for wave number 7. That's letter G on my screen out here, but it's the Rhodes momentum indicator signal. That's the one that's most important to us. Why? Because if we get a bullish reversal candle, we should see some type of short-term bottom. Spit it out, Stevie. And now that short-term bottom should take us up to its oscillator and change line, whatever that's printing at that moment in time. Right now it's at 138 and change. And then you've got the bottom of its profile, but more importantly, the center of the bullish structured profile. And that says that if it's just a counter trend move where Apple would find resistance, would be in the 141 to 142.18 level, most likely 142.18. But we don't have a signal that Apple wants to do that, but it is the chart, I think, or one of the charts to be paying attention to today. To see what its full intentions are. Now, if we take a look at the weekly time frame chart here for Apple, it says that it wants to still head lower out there, and that it wants to get all the way back down to the bottom of its descending price channel out there. If it does that, then that might be taking us to its monthly TD9 breakout level of 123.13. So important to monitor Apple. We don't get the bullish reversal candle, and we close inside that swing point out there. It says that the move to the downside is likely not over. So simply, this is the first place to start. Now, because Apple is such a high percentage of the NDX 100 or the NQs out there, I was going to try to make a smooth transition. Nice job there, Stevie. I thought that I had the NQ chart up there, but no, I don't. So that's okay. We're going to change that. We're going to go take a look at the NQs themselves. So in the case of the NQ, if we just take a look at the left-hand chart, you've got that consolidation measured move breakdown. And that says that price should get down to about the 870-ish type area out there. But I would say that, you're still inside that swing point from October 13th. Odds would favor that price at least gets down and spikes that low. That low is at 10,918. 5-hour time frame chart. I do see an A to B equals CD that is completed. That completed at about 4 o'clock this morning. Same type of pattern in the 4-hour time frame chart. The completion of that was at 6 o'clock this morning. Rhodes momentum indicator bottom that has been confirmed. It's a 3-river morning star. That took place at 4 o'clock this morning. So the larger intraday time frames out here are supporting the possibility of a bottom. If we take a look at the 60, the 30, 15, and the 10-minute charts out there, we saw a nice rally that began last night. That was confirmed on a 60-minute base at 2 o'clock in the morning with the Rhodes momentum indicator bottom pattern. Price moves higher as we're coming into the open, and then we see a spike down. That spike down on a 60-minute was testing support. So support itself, that was profile support. The 30-minute chart, that spike to the downside, was testing TD9 count breakout support of 11,066. So you can see that what really took place out there, as far as why did price stop where it did, well, I have to presume it was the TD9 count breakdown resistance level that we can see here on a 15-minute time frame chart. That's up at 11,227 and a quarter. Price got up to that area and simply found resistance. So what we know is that the move to the downside has found support. We tested that earlier this morning. We also know that the move to the upside has found resistance. So we know where the battlegrounds, in essence, are at. That's a huge advantage. So to the upside, watch that 11,227.25 level. To the downside, it's the lows of the day. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So you got the Dow's up 18, S&P's now negative by 5 points, NASDAQ down by 57. That's 0.5%. Russell's still up 0.5% or 8 points. So quite a mixed bag out there. Let's go to our first request coming in from Duffy inside the Tiger's Den. Oh, I do not. Duffy, we're going to get back to you in a moment because we've got a caller on the line. So let me see. We've got Brent in Martinez, California. Hey, Brent, thanks for calling. Thanks for holding. How are you today? And Merry Christmas to you and your family.
Same to you, Steve.
Thank you.
I was going to say that at the end, but I'll do it right now. Just Merry Christmas, and hope you have a great holiday with your family.
Perfect. That's certainly what I'm looking for. So you're calling about natural gas, the UNG out there, which is testing its swing point low from just, I think, maybe a week ago or so. So tell the folks what you're looking at, how I can best help you.
I've been watching this like I'm sure many others have, but the one observation that I made and why I didn't go long even off that last low is because I can see a bigger pattern there if you take that, make the A point the August high, October low the B point, C point that November high, and I believe that was a 382, but you could check it and see. And then that October swing point was passed with greater volume. So
yes,
to me there's a legitimate AB equals CD that's in place there, and I just want to get your thoughts about it.
Yeah, no question. So let me see, what screen am I on? Okay, I'm going to switch over to the black screen out here, folks. The reason is because I want to be able to at least draw in for you. I've already done that. The A to B equals CD pattern that Brent is referring to. So you do have the daily time frame. This is the February contract for natural gas. The swing point that we're taking a look at was from that trading day of October 24th at $5.47. And we're trading below that right now. We've closed below that. And so, Brent, that's one of the reasons why you're thinking that maybe this is going to turn into at least a 1-to-1 A to B equals CD pattern that would take us down to about the 380 level. And 380 then all of a sudden gets us back in the 2022 area. So you're thinking that's the most likely outcome at this stage?
I'm thinking that's a possibility. I'm willing to be patient enough to see if that plays out. If I miss something, that's fine.
No, absolutely. So let's pull over. Let's take a look at the other intraday charts out here, the other daily time frame charts. So what I don't have on a daily basis is any kind of bottom signal that is taking place right now other than the test of that swing point. So no TD9 count, no Rhodes momentum indicator signal, no completed A to B equals C, no nothing. So just that swing point that it's going against. If we take a look at a 5-hour time frame chart, the 5-hour time frame chart really supports your idea that natural gas should head lower. The reason I say that, Brent, is because what price did was it immediately negated a TD9 count bottom. The TD9 count bottom forms at 4 o'clock this morning, doesn't even hold, crushes right through that. But again, we're back at that swing point level. But the 5-hour time frame chart certainly supports the idea of price moving lower. The 4-hour time frame chart also negated a TD9 count bottom. Price is sitting back at a potential support level at 529. I have no bottom signal whatsoever on the 120-minute time frame. 60 minutes got a TD9 count bottom, Brent. That says you could expect or anticipate a bounce up to about the 536 level. Probably an A to B equals CD to the downside on the 30-minute chart. So what I'm seeing here, when I look at the smaller time intraday charts, are certainly bottom patterns out there, but no levels of resistance that have been taken out. I would say that if that would not be unreasonable to see a move up into that 536 level. That's both the 60-minute oscillator and change line, and on a 15-minute, 1-5, that is the TD9 count breakdown area. So it looks to me like short-term wise, we're testing a swing point, hasn't busted through it. You've got these the shorter-term intraday charts with some bottom signals, and so you could anticipate some type of rally. But I certainly longer-term charts, I say longer-term 5-hour, 4-hour, 2-hour charts, they're supporting that idea. So I would stick with it. I don't have any reason out here to suggest otherwise at this moment, other than that we're testing that swing point. And if resistance levels to the upside and the shorter term time frames get taken out, well then, the test of that swing point was some type of a bottom out there. Does that make sense, Brent?
That does, absolutely. Yeah, I'm willing to take, I would be certainly interested if it were to get down and complete that pattern. That would be something that's more what I'm interested in instead of the little intraday stuff.
Sure.
The bigger pattern is what I'm trying to focus on.
Okay, perfect. Well, it's there. So now just kind of watch the intraday charts and watch these resistance levels, and that probably provides you with some additional information to assist you with your thought process.
All right. Thank you so much, Steve. Again, Merry Christmas to you and your family. Just have yourself a wonderful day.
You bet. Thank you. That was Brent in Martinez, California. That was a look at the natural gas contract game. We were looking at the February contract. We did have requests coming in through the Tiger's Den. That Tiger's Den request was from Duffy, who wants to take a look at ticker symbol EXK, which is Endeavor Silver. Having a beautiful day today, just as silver is. It's gotten back inside its profile area. So the daily profile, which chart are we looking at? The white background. Okay. So you can see the bottom of that daily profile out here is Duffy is $3.29. You'd like to see price hold that. Price is above its oscillator and change line. If it can maintain that 329 level, Endeavor Silver should make a run for its recent highs, should make a run for the center of its bearish structured profile, and that's in the 358 level. So that's what the daily time frame chart tells us. The weekly time frame chart out here looks like there is a completed A to B equals CD to the downside pattern. So let's just draw in the A to B line, and let's move the B line, so to speak, up to where the C point is at. That's going to be right here. And so it has not really completed the A to B equals CD to the downside. So Duffy, what you have on a weekly time frame chart out here is a consolidation with inside its profile. And that's between 295 and 374. Even though you don't have it completed by the D point pattern, if price were to close above 374 on a weekly basis, you'd have an intermediate term form change in trend. 373 is also the top of the daily profile. So what we can say, Duff, is that the big battle up ahead for you, should Endeavor Silver continue to move higher, is going to be in at 373, 374 level. And at 377, that happens to be the monthly oscillator and change line. So that's where the big battle is at. If I look at a 30-minute time frame chart, just from a short-term standpoint for you, what Endeavor Silver has done is run right up into resistance. It's got a nice Rhodes momentum indicator bottom. That took place right as we came into the 4 o'clock session because we had a bullish engulfing candle out there. That confirmed that pattern. Then we see silver was overnight, obviously taking off right about 9 o'clock or so. was when I believe silver began and gold began to take off to the upside. But what Endeavor Silver has done here on a 30-minute basis, Duffy, is it's run right up into resistance. That's at 337. It's backed off just a tad. So from an intraday standpoint, today specifically, a close above 337 will suggest that its rally should continue on. So that's what I see when I take a look at the charts for Endeavor Silver. Duff, I hope that helps you out. If not, let me know what additional information you were looking for, and we'll find a way to get that to you. So thanks again for the request. The next request coming in from the via email, and this one is coming in from Alton. Alton writes in, he says, I'm looking for an entry into LNG. What do you see? So that's good. That kind of follows the theme of taking a look at natural gas in essence. So we get back from this break, we're going to go take a look at LNG. And that's for Alton. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. The Dow's off 23. The S&P is down about 10. NASDAQ 172. Russell's up 7. Semis are down 20. Gold's still up by $26. Silver up 96 cents out there. Looks like there's another voice channel. What the heck? Cancel. Not sure what I did there. So we've got the question that came in from Alton. He wants to take a look at he's looking for an entry point into LNG. So what I've done here is I've switched over to the black background charts. The reason is, we'll take a look at the daily time frame here first, because there's an A to B equals CD pattern that is present. And so what you'd be looking for here, Alton, is a bullish reversal candle to confirm a Gartley buy pattern and buy the D point pattern. So right now, price is below the 1-to-1 price projection level of 154.40 or 152.69. So you just want to be on the lookout for a bullish reversal candle. If we don't get that, price should continue to head lower. The next price target area is 147.95. That would be the 1.272 expansion of that A to B leg out there. So the daily time frame says, hey, watch for a bullish reversal candle. The weekly time frame, I leave this up here just simply because you and I, we've talked about consolidation patterns. We know that each of the equity future contracts are in consolidation patterns. That suggests lower price out there. LNG broke out of a consolidation pattern. It broke out to the upside. I haven't touched this chart out here, so it's not like I drew this in or anything. It was my apology. It was drawn in well ahead of time, and we can see that in fact LNG did make that measured move out there. Now price is below the bottom of its weekly profile out there, so I don't have any kind of a signal. Price is above the top of the monthly profile. Let's just take a quick peek at those white background charts for us real quickly here. What the heck? What is going on here? My apology, folks. Stevie is having some brain farts, apparently, and some real stinkers. Now we take a look at the white background charts here for LNG. We see no other bottom signal. In other words, we've got the A to B equals CD pattern. We don't have any other kind of pattern that is forming that I see at this moment. The next downside price target inside of LNG, remember we talked about the A to B equals CD price project. That was at 147. Turns out at 147.11 is the TD9 count breakout area. So that's more the level that I'd be watching for, Alton. But again, a bullish reversal candle would generate a buy the D point pattern. As in the weekly chart, you can see a Rhodes momentum indicator top. This says that if 147 price cruises through that, doesn't create a buy the D point pattern, you could be looking to move down to 142.83. That's the weekly breakout level. So, Alton, that's what I see. Quick peek here, though, before we sign off on LNG charts. Let's look at the 30-minute chart. 30-minute chart shows wave number 7 pattern out there. But all that did was what it's supposed to do. Whenever you get a bottom pattern, you're looking then where's resistance, where's the first area where price could turn down. In this case here, it was the top of its profile, which is at 153.37. It's done just that. Right now you got a little bit of a consolidation within that profile between 151.72 and 153.37 out there. So that's what we see. We take a look at the charts for LNG. In summary, go ahead and wait for that bullish reversal candle to form before you take a long position in it. So I hope that helps you out, and thank you very, very much for writing in. The next question that we have out here, so that Stevie can get to it, is coming in from L.M. Lee. Lee wants to take that's small print. Steve got to turn his phone sideways and enlarge this. Mine are good. They're just not that good. Notice what appears to be a rather large A to B equals CD downside move, then up to what looks like a C point in the VIX. Does it suffer the same character as do other interests in your perspective? So he's looking for Lee is looking for an A to B equals CD in the spot VIX index out here. So where are we at on the white background charts? Let me get that going on the black background charts. We'll go ahead and change the screens out here. Give me a moment to do that, which I know you will. So Lee is talking about a very large A to B equals CD that he believes he sees out here. So he's talking about going back to $34.53. So the 34.53 is going to take me to where 34 right here, to the date of October 12th, and then you're using what, 1895. So he's using the low. Yeah. Okay. So great question. Thank you for asking. So what Lee is doing here, in advance of confirming any kind of A to B equals CD to the downside, he's drawing that in, and that drawing in looks like this. Now, what Lee or I or anyone else have no clue what's going on here. What we have no clue, Lee, is whether or not price is going to take out the 1895 level to form an A to B. If your question was, does the spot volatility form A to B equals CD patterns? The answer to that question is yes. And here, if we take a look at, just as an example, I'll draw an A to B equals CD to the upside out there, and that looked basically like this. Your A point was down on August the 12th. Your B point looks like it was up here on September 6th. The C point was a retracement down into September the 9th. That created a 1 to 1.272 A to B equals CD pattern. You got that bearish reversal candle on September 28th. That area, in essence, was retested and the price moved lower. So do A to B equals CD patterns? I think that's what your question was. Do they work for all instruments? And the answer is that they do. Can we draw that in as an A to B equals CD to the downside? We cannot. You can, but I have no idea whether that will come to fruition. What we do know out here with regard to the spot volatility index, where I believe we know, let me do this here. Let me VIX. Let me get that going on the white background charts as well. We don't look at it often, but we should look at it, especially since you brought it up. See if there's any other kind of signals out here. Again, he's asking about, the spot volatility index, in essence, pay attention to the other patterns that we talk about all the time. For example, does the spot volatility index take a look at the Rhodes momentum indicator signal? Well, if we take a look at the daily time frame, remember we were talking about the top that formed out there that had generated that sell the D point pattern? Well, it did that on the trading day of September the 28th. Then when the actual high, well, not the actual high, but then we got a second confirmation of a top. That was the Rhodes momentum indicator signal out here, Lee, on October 13th. That was the bearish engulfing candle that confirmed that pattern. Then what takes place out here? Well, we move lower with a Rhodes momentum indicator signal. Wave number 7, that's letter G, that's a bottom signal out here. And then we get a bull sash candle on December 5th. That confirmed that the spot volatility should move higher, which in fact it has done. So you can see that, yes, the spot volatility, like any other indice, instrument, or what have you, we can adopt the same tools and signals to help us identify tops and bottoms. But is there a large A to B equals CD to the downside? Only if you get that close below 1895 could we go ahead and take a look at it then. So I hope that helps you out, Lee. Thanks so much for your kind wishes as well. At the bottom of that email, much appreciated. And thanks for taking the time to write in. I guess Stevie just has to flip his phone the right way, see if there's any other requests out there. And voila, there is one here from Hector and Patty. And Hector writing in, happy Taco 2 for Tuesday. And that means that Hector wants to take a look at ConocoPhillips and Halliburton. Please, on weekly, OUL resistance, support, and possible A to B equals CD patterns out here. So let's do this. We're about to go to a break, but let's go see if we can fire up the charts for ConocoPhillips on the black background. COP is the ticker symbol. Well, this is popping up here. We've got about maybe 15 or 20 seconds. And we see an A to B equals CD. Well, certainly the weekly had an A to B equals CD to the upside that it completed. You're looking about the A to B equals CD pattern to the downside. Well, let's go take a look at ConocoPhillips. The A point is out here on November the 4th. The B point is down on November 21st, a one-day rally into a high on November 22nd. And now what we have here is what looks like could be today a confirmation of a buy the D point for ConocoPhillips. We'll come back and look at the charts. We're back from this break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at ConocoPhillips. We put up the black background chart so I could easily draw in the A to B equals CD pattern. What we see out here is that, in fact, what the heck happened? Make sure that I'm not screwing this up somehow. There we go. So we see the 1 to 1.272 A to B equals CD pattern. To the upside, we actually had this pattern confirmed here with this gap to the upside. That was back on December 13th. Looks to me like we're going to get a reconfirmation of that. At least that appears right now because you have a bull sash candle. So what you should expect or anticipate here, Hector and Patty, is that price should be able to make its move to 114.22 and 117.21. Those are your battleground levels out there. If I switch over to the white background chart, what we're also going to see, as if we get a bullish reversal candle today, which it looks like we've got right now, this will generate a Rhodes Momentum Indicator bottom. So you also have a slight battle at its red oscillator and change line. But it's so close to the 114.22 level, the center of that profile, we're just simply going to leave that as the battleground, then above that 117.21. And if ConocoPhillips can close above the top of its daily profile, that would then signal move to the 129.22 level. You asked about that oscillator and change line. Well, for the daily time frame, Hector and Patty, that's currently printed at 113.80. The weekly is 122.98. The monthly is 108.38. So that's what I see when I take a look at ConocoPhillips as we speak right now, and that is at 11:43 on December the 20th out there. Your second request was to take a look at Halliburton. So let's pop up those charts for Halliburton. Its oscillator and change line, by the way, is at 36.87 for the daily, 35.62 for the weekly, 32.18 for the monthly. Prices above all of those. Each of those are green oscillator and change lines. That's a bullish signal. However, we can also see that bullish signal ran right into resistance where the sellers are located, and that is the top of that daily profile. It's at 37.74. The high today so far inside of Halliburton, well, it's 37.76. So you know that is a key level of resistance or a battleground, and if price can clear that, that means close above it, then we should see a move back to its Rhodes Momentum Indicator top. That's the bearish engulfing candle that formed on the trading day of December the 5th. 39.99 is the call on the weekly chart. That's where price wants to head to, but you know you've got to clear 37.74 first. The monthly chart, its battleground would be up at the 41.67 level. So Halliburton looks bullish. The daily chart, with the exception of the fact that it ran into resistance, so you may just have a bit of a consolidation, which is between 35.02, maybe even 34.33 to the downside. But to the upside, we know it's at 37.74 level. That's the level for you and Patty to be watching. So I hope that helps you out. Thank you for your Taco Tuesday twofer out there. And you have a Merry Christmas and a Happy New Year as well. That was Hector and Patty. Just checking the phone lines here, really the email lines. And we do have a question. This one coming in from LB. No questions. I just wanted to wish you and your family a wonderful Christmas and Happy New Year. Well, Lee, thank you very much for doing that. And the same to you. Thank you for another great year of financial education. Well, I wish you did have a request out there. That would make it nice and easy, but I appreciate the comments very, very much. So that's very kind of you. So what do we want to look at next? I think what we should look at next is something that's moving, which would be Goldilocks. So let's go take a look at the gold charts out here. Let's get those intraday charts fired up. If you give me just a moment. You've got gold trading up GC02. Right, we're February contract out there. So let's get that fired up. Gold's up by $29, trading out at 1826. So we want to go take a look at its chart pattern, see what its signals are for us. We can see that in the case of the daily time frame chart, I'll just simply expand this out for the moment. What we can see out here with regard to Goldilocks is gold is trading above the top of its profile. That's a beautiful thing. That was at 1806. It's above its green oscillator and change line. That's a bullish signal. So price should continue to move higher. You could get an A to B equals CD to the upside inside of Goldilocks. In fact, you really already have that confirmation. It looks like this. The A point is, so this formed a nice Rhodes momentum indicator bottom. That was the bottom that took place on the trading day of November 3rd. It was confirmed on November the 4th. Now I'm just simply going to take that A to B line and just move that over to the C point out here. And so you've got in essence, a confirmed A to B equals CD. That should take us into the 1908 level. That's a signal for Goldilocks. Certainly clearing the swing point from December 13th. That high at 1836.90 would be additional confirmation on the daily time frame that the A to B equals CD pattern is well underway. The 5-hour time frame chart pulled back, tested breakout support. That breakout support was at 1782. It did that at about 4 o'clock on December the 15th. And now what price is doing, it's testing its TD9 count breakdown area. That was at 1825.40. Now this bar does not complete till 2 p.m. It's only 11:47, but a close at 2 p.m. of 1825.40 would be a bullish message. That would be the same signal for the 4-hour time frame chart. Now both the 4-hour and 5-hour have Rhodes momentum indicator tops. And that says that what price needs to do to negate those signals is close above that 1836.90 level. So you've got 1825.40 and 1836.90. Those are key areas for those of you that are trading gold or looking at gold or watching the mining equities. That's the area that you want to take a look at. On a 2-hour time frame chart, price has already got, you can see it's got an A to B equals CD to the upside pattern. I say you can see it, maybe you can't see it. Stevie will go ahead and draw that in here. The A to B point is what we're going to draw in. And then what we're going to do is just simply take that, move that over. Well, we're going to try to do that. Try it one more time. Third time is the charm. And there is the, so now you can see the B to C. So we're already above the 1-to-1 level. That just says pay attention. Pay attention because if you did get a bearish reversal candle, that would confirm a sell the D point pattern. That would take price back to support. We don't have that yet. The 60-minute chart actually confirmed a Rhodes momentum indicator top. It did that as we came into the 11 o'clock time frame. You can see what generated was a bearish shooting star candle. My experience is that typically those candles either work or they don't. What I mean by that is you usually see follow through to the downside on the very next trading session if they're going to work. We don't have that at this stage. It doesn't negate the Rhodes momentum indicator signal, but it does put us into a neutral position. Why neutral, Stevie? Because price is above that green oscillator change line and it's above its profile. And those are bullish signals. So even though we've got a bearish confirmed pattern, price hasn't taken out any key levels of support out there. And that's why Stevie moves to the neutral signal. We've got the same pattern on the 30-minute time frame chart. 30-minute confirms a Rhodes momentum indicator top. It does that at 11 o'clock. Price right now, though, does have a new profile. So your area of support at any kind of a pullback out here, this is on a 30-minute basis for Goldilocks, should find support between 1820 and 1822. Likewise, this has resistance, the top of its profile on a 30-minute time frame. That would be at 1832.40 level. So, close above that, 1832.40, I believe it was 1836.90 or so they were really looking at. That would negate all those topping patterns and suggest that gold is getting ready to take off even further out there. So I don't see anything else. We take a look at Goldilocks. We did look at the silver chart earlier. So why don't we take a look at silver, see what signals it's providing to you and I. Oh, you know what? I do know the signals also that. How are we going to do this? Well, I'll tell you what. I'm just going to do it like this. We're going to take a look at the same. We're going to take a look at the March contract here in the same time frames. My hesitation was the fact that on a weekly basis, what we have is TD9 count patterns. at least for silver. I can't recall if we've got that for gold or not out here. But we take a look at silver. Silver's got a daily Rhodes Momentum Indicator top, and it closed above its high. The high that we'd be taking a look at out here would be the high from December 13th, 24.39. It's also the top of its daily profile. You close above that, silver on its way to the moon. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. You guys, the Dow up 41, S&P is flat, NASDAQ 100 down 32, Russell's up 8, Summers are off 8, Trendy's up 183. We've got quite a mixed bag out here. We're going to finish the show. Take a look at two different symbols out here. The first one is for Dan inside the Tiger's Den. It is for Sell Sci Corp out there. CBM is a ticker symbol. Dan's looking for a potential bottom. Well, Dan, yesterday was the completion of a TD9 count on a daily time frame. Says that low is really important. That low is 202. We're trading right now at $2. So you close below 202. It negates the TD9 count bottom pattern and says that we head lower. Not really such a bad deal out there. It says you're going to get lower price because you're looking for an entry. What I'd be paying attention to, perhaps, is the weekly time frame. The weekly time frame has triggered a Rhodes Momentum Indicator signal. If you were to get a bullish reversal candle, I know you're looking at this from more of a long-term standpoint, that would give you or could give you a nice bottom pattern. Short of that, it looks like what price is doing is headed back into the lows from July of 2018 in the 80 cent type area out there. The low was actually 83 back in July of 2018. You're below the monthly profiles. If I look at a 30-minute time frame chart out here, what do we see? We see a Rhodes momentum indicator pattern was signaled. It failed immediately at 11 o'clock this morning. So it does look like a lot of selling pressure still in this stock here. And it looks like it may instead want to go target the 89-ish area out there. Again, confirmation, Dan, I think would be a close blow. 202. That's the bottom of yesterday's TD 9-count bottom. So I hope that helps you out, and thanks so much for the request out there. Let's go to our next request. This one coming in from Bob in Spokane. He wants to take a look. Well, I thought I had done that. I did, apparently. He wanted to take a look at TJX. TJX is trading right now at $77.71. It's trading with inside. It's consolidated, in essence, with inside its daily profile. The daily profile has support at 77.08 and resistance at 81.17. If we look at the weekly time frame chart out here, I don't have any kind of a bullish or bearish reversal, bearish pattern out there. We just have a consolidation with inside TJX's profiles. That's between 74.71 and 81.17. So right now, we'd have to say that TJX, Bob, is really just in a consolidation pattern. So I do hope that helps you out. Thanks so much for listening. Folks, stay tuned. We got great programming lined up. I'll see you tomorrow, live at 11 o'clock sharp. Have a terrific Tuesday, folks.